Hey everyone, and welcome back to Option Alpha. And tonight's video, I just wanted to go through what's really happened here in the last 2 days for the whole markets in general. We've had a pretty bang up week for the markets. The last 2 days, the Dow's been up over 300 points, just having a really strong ride. I think a lot of the move obviously is coming from retail news. There's good growth news out of China. And obviously for the US market, since our economy is totally and 110% driven on consumer spending, as the consumer goes out and spends more money and more money and more money, then the markets do well. So this is a look at the Dow, and you can see here that these blue lines are Fibonacci's, as always. And the last 2 days have just been pretty much straight up. And so what I wanted to look at is the last time that the Dow had such a good 2 day rally, and that was back in early July here, and these 2 days in particular down here at the bottom of the chart. So I'm just going to zoom in on these so that we can get a frame of reference for where things might go in the future, and then we'll take a look at some other indexes as well as the dollar index and the VIX and crude oil. So a lot of things to cover tonight pretty quickly. Okay, so here's a look at the Dow back in early July. And really, this 2 day period here, the 7th and 8th, is when the Dow had just about as good of 2 day rally as we've seen. And you can see that there was some continuation of that, and then the market kind of went sideways for about half the month and continued out the rest of the month on a strong note. And obviously, after that, as we head into August and September, the markets actually started to kind of fall off in August before rallying in September. So really what we had is a little bit of a continuation after this 2 day pattern, a little bit more consolidation, the market kind of finding its footing, making sure that this level is solid and stable to rally off of, and then more of a upward to sideways movement into the end of the month. Now, it wasn't as strong as the initial move. You can see that the initial move was, almost 8 days of straight up movement, but it definitely was a bullish move. So if we kind of scroll over and see where we're at as far as the Dow is concerned, again, we have this 2 day move. It would be very likely that the Dow is going to try to make a run back at the highs right here of November. I think that's pretty much a certainty now that we're going to be hitting upwards of that levels, and that's around the 8 or 11,450 area. So the Dow's going to probably make a run at that level. Whether it does it, this week or early next week, I don't know, but it's safe to assume that it could probably continue this trend. We have enough momentum going right now that things are still looking higher. Now, what I think is going to happen after that is after we either crack that level just barely or get near it and don't break it, is that the Dow is going to kind of fall back here into the middle part of December and bounce off of this Fibonacci line here in blue. And you can see this thing has been pretty strong historically for the Dow. You can see it's hit the Fibonacci line as resistance a couple times, broke below it, and then came back up and hit it as resistance once again. So now that we're above it, it's going to act as pretty strong support, and I think that's where we could bounce towards the middle part of the month before trying to finish out the year in, a bullish or strongward fashion. So if we take a look at some of the other indexes, the Russell has already broken out to the higher side, and you can see I draw all these Fibonacci's on all of the index charts that we use. But the Russell's already breaking out to the higher side, so we have to actually go back in time and actually look at probably a 5-year picture to see where the Russell may actually have some resistance. And you can see that right in this 5-year picture here that it looks like the Russell is going to have some sort of resistance, or at least some trouble getting through around the 800 region, or right below the 800s, really the kind of 780 level in that area. So even though the Russell is rallying, it seems like it's going to have some overhead resistance to come into, and you can see that this has been on just almost a nonstop crash course here towards the higher side. If we take a look at the S&P here real quickly, and let me just change my chart as usual, you can see the S&P is pretty similar to what the Dow is showing as far as movement. We're going to be making another run back up at these highs, back up at the level around 1225 is what I'd assume the S&P is going to climb up to. So we're really close there. And then afterwards, it's probably going to settle back down around the 1210 region right in here before it makes another run. So that's what the markets are generally going to do. As far as the dollar index, this is one that I always get emails on. And let me throw up the Fibonacci's again on this one. I love the Fibonacci's on the dollar index because they have been so strong in the past for helping us see some turns. And you can see that the dollar bounced off of this level. It hit its head or hit some resistance at these two levels before, and again bounced off of this level one more time. So it's coming into another area of resistance, and as the dollar continues to weaken, that's only going to be helpful for equities because it's going to send the markets higher. So a weak dollar is good for equities and good for commodities, so that's all going to send the market higher over the coming weeks and months. So hopefully everyone's gotten a little something out of this video. As always, if you have any questions or comments, please email us, and happy trading.